Staying with results out this morning, AFGRI's full-year headline earnings per share ticked up 3.5% to 56.6 cents. Revenue climbed 28.2% to 9.4 billion rand. And I'm joined in studio now by Chris Venter, he's CEO of AFGRI, for a look at those numbers. Thanks so much, Chris, for joining us this afternoon.
Thank you.
Well, when it comes to a business like AFGRI, there's really two factors that have come to bear. On the one hand, you've got to deal with imports, and that impacting your poultry division specifically. On the other hand, the price of maize. So perhaps let's start off there, because the price of maize reached record highs during the year, and that's put a phenomenal amount of pressure on the business.
Yeah, specifically on the food sector of our business. If you look at the business, we still operate on a financial services side, agri-services and food, and definitely on the food side. You know, you could see that in the poultry results. Poultry as a whole, I think as an industry, obviously, experiencing the margin pressure. From our point of view, the benefit that we received was on the agri side. We could see the benefit from the tractor sales, but definitely the high maize prices, which we anticipate will continue for some time, place some margin pressure on our food segment.
Of course, you know, it's impacting this food division, as you say, negatively. To what extent have your margins come under pressure, specifically with imports starting to take a toll as well, because that really increases the competitive arena?
If you look at the business on the milling side and the oil side, we haven't experienced the import so much. So primarily it was as a result of the high commodity price. We saw soybean trading at above 6,000 rand a ton, which is extremely high for us. But definitely on the animal protein, both animal feeds as well as poultry. Poultry increased 40,000 tons for the month of April. That decreased a little bit over the last 5 months, but that's primarily as a result of lesser demand. We would expect that to increase again. That combination, together with high feed prices, raw material increasing 21%, you know, for just the raw material price year on year. So that obviously, together with the increases on the import side, has placed enough pressure on the food business.
It certainly forces you to focus on operational inefficiencies, and that's something that has received some attention. Run us through, you know, what exactly you've looked at and how you're working to reduce inefficiencies within the business.
Look, within the animal protein business, we had end of last year, we changed some of the management structures there. We also appointed Isaac Buitenbach, who's actually been in the business for 24 years, highly regarded. And with that experience also, we brought in a lot of technical you know, efficiencies in the business. We have looked at areas in terms of staff and automation of certain areas. You know, unfortunately, in an industry like that, you need to focus on cost cutting, and that has been a focus for us over the last 5 months. That will continue to get attention going forward. But that is really I would say, in a sense, your benefit, in a sense that you can look at costs and make sure that from a you know, performance point of view, your costs are actually in line and stay in line going forward.
You're not the only business that's obviously looking at operational efficiencies, or inefficiencies rather, and addressing those issues a little bit more aggressively, and that has come to bear on your company in a positive way as well, because the higher maize price has encouraged farmer spending on mechanization and other farming requisites, you know, to actually improve, and that's benefited specifically your agri-services business and the retail and equipment division.
Yes, you're absolutely right. I mean, with the high maize price, obviously it's very good for the farmer. So the farmer's balance sheet is very strong at the moment. And as a result of that, we've seen a lot of activity on the tractor sale. It's the first year ever that AFGRI has actually sold more than 1,000 tractors as a group. You know, we've seen the increase on the equipment side in general, but also on the retail side. So definitely the benefit of that is the high maize price. The question is always whether it's sustainable. You know, even the farmer would recognize that the price of that nature is not sustainable. And the question for a group like AFGRI is, where is your best price from both the food side and the agri-services side?
When it comes to the agri-financials side, I know the last time we chatted, there was a focus on you wanting to improve your credit business, which had a history of not doing too well. I mean, you've successfully concluded the sale of your farmer lending book to the Land and and Agricultural Development Bank of South Africa. Run us through that and how that now positions the company to bolster that division within its stable specifically.
Look, that business manages at the moment a book of just above 4 billion rand. So your benefit is that we're only receiving a fee income from the land bank for managing the business on behalf of them. That is really, they own the data, they manage the data. For us, it's really making sure that we can originate the debt, that we can do the administration on the debt, and really support them in that function. Obviously, the bigger the size of the book gets, the more income you generate out of the fee income side. But I think it's, people need to understand, it must be clear that we only sold the actual data. We didn't sell the whole entire business. For us, the financial services business is very key in terms of supporting the supply chain for the whole of the agri side. And we will continue to position that. So for them to achieve a profitability of 58 million is actually very good, coming off a loss in 2009 where we started restructuring it.
So how are you going to be positioning that division moving forward? Where next for the financial services segment?
We created a new brand, Unigrow, in that business, particularly with the aim of expanding it nationally. You must remember that business was primarily in the past positioned around the areas that we operate. With having the strong balance sheet of Land Bank behind us, they can now actually originate debt in other areas as well. So there is a focus to expand that on a national basis and to make sure that we can actually provide services to the whole of the agri-services industry, and not just to the farmers that we support in the areas that we operate.
Of course, we've just done a brief overview on every segment of the business. If you're looking at things, though, a big focus is on your food division and poultry specifically. A weaker rand has got to be good for you because it makes imports of poultry a little bit more expensive for the South African consumer. Just to what extent has this put pressure on, on the way you do business, the fluctuations that we've seen in the exchange rate?
The exchange rate, obviously, I think at the levels where it's currently just above 8 rand, I don't think it would have such a big impact on imports. I think the imports that is coming in is still very competitive. I would imagine if it gets closer to 850 or 900, it will have a bigger impact there. The issue is that, it's not just that, because we're also sitting with a demand side that's fairly soft at the moment in terms of poultry industry, and we're also sitting with a very high animal feed price going into the poultry industry. So you need to couple the animal feed price together with the soft demand and obviously the imports. And the imports are contributing to the fact that there's a bit of an oversupply in the market, and that obviously has a huge impact on the net sales value for poultry specific.
We had a UN report last week, though, warning that higher food prices globally will be triggered by a drought that's currently being experienced in the US. I mean, how does that impact you? Because surely it presents some good news in that you would be able to increase your prices to the consumer in tandem.
On the food side, you're not always able to actually give this, the direct increase on the raw material fruit to the end customer, especially if you sit in a poultry environment. So there is a point where the consumer just can't take an additional price increase, and that we need to keep in mind. I think the prices which currently will remain strong as a result of the drought in the US. We expect that to be very strong, or the price to be very strong up to probably end of next year. The reason for that is I can't see necessarily a change in the pricing before the next season in the US starts. And I think one needs to position yourself to carry you through that period. So from an AFGRI company point of view, you must make sure that your costs are in line. You must make sure that you manage your productivity in those areas. But again, I mean, for us, it does give the benefit on the agri side, and we would expect our agri services business to do well for the next year as well.